The main thing for the National People's Congress is going to be the growth target. And I think, looking at the local governments have all released their growth targets, and they're suggesting around 5%, I would say, is what the national growth target will be. Our view is that is going to be actually quite hard to achieve because, unlike last year, the base effects are not working in China's favour. We're forecasting 4% growth for this year. So we think a more realistic target would be 4.5%, but the chances are they could go for 5%. The interesting thing, I think, Tanvi, is how markets interpret that, because if they actually have a 5% growth target, and I think markets realise that that's going to be pretty hard to achieve this year, given the way things are, maybe it will increase expectations again that it means more policy stimulus is coming.
But what more can we expect on the stimulus front?
Yeah, we're not. We were a bit hopeful that soon after Chinese New Year holidays ended, there could be the big bazooka. It hasn't come through.
Can we give up on the big bazooka? Why is the market hoping against hope that a big bazooka would come? Maybe, but the policymakers don't want it.
It seems that way. Yeah. That's right. And so our view is that post...
Is that really a big miss? Are they really missing the point?
Well, we think that the property market is really in the doldrums. We think there is a deficit of trust right now between people on the street and policymakers ever since the lockdowns. And so we think there needs to be something to jolt back animal spirits. And it's not just helping the stock market, it's the real economy. And so, when we talk about big bazooka, what we think is needed is something that actually bypasses the banks and is essentially PBOC providing, essentially QE, maybe through the policy development banks, but that actually goes, I think the number one thing is those pre-sold homes that have not been delivered need to be delivered. That's an important part of it.
Clearing the inventory.
Why not helicopter money to fix the balance sheet recession?
Well, that's what I talked about, QE, right? Yeah.
But just direct, straight consumption vouchers put in and just allow people to get that feeling of spending rather than, trying to overcomplicate things. Because we saw what happened if we're talking about the US example. If you really want to juice inflation, give out free money.
That's true, Will. And I think that's been proposed a few times in the past. I think the pushback on that, I think, are two things. One is there is a concern that it will set a precedent and encourage, I think the word is laziness, among workers. But the other thing which I think is relevant is, it's 1.4 billion people, and the risk that some people get the money, some people don't get the money. Maybe is it going to be hard for those that aren't on the household registration system in the cities, in the countryside, and then does that start to fuel some social unrest if some get it, some don't? So I think there's some of the concerns.
Don't we already have a system in place in China where people have social scores? People are, viewed one way by the government, and other people are viewed another way. That if you were just to, operate on a strata and then distribute the money based on, what their own beliefs are vis-a-vis, what the government sees you as a good citizen, bad citizen, wouldn't that just resolve the issue then if you're trying to sort out how to distribute it?
It hasn't been tried, I guess, and so there is concerns about, what are the unintended consequences from it. But, I think that's another area, right? I think for more forceful, more unorthodox policies, whether it's your helicopter money coupons to households, or whether it's more, maybe less unorthodox, the QE that from the PBOC delivered from the policy development banks to property developers to finish these homes. These kind of things, I think, are needed to jolt the economy back to life. The only
thing I would say to that is, doesn't that throw good money after bad, in a sense? Even though, yes, we are printing money and we are trying to address the issue at hand when it comes to finishing these houses that are, on the books. Isn't that the risk, that you are just reducing a sector that really does need to contract significantly?
Yeah, so it's a tricky one, I think. You're right. And the question is, if you... so far, China's been resisting big policy stimulus a la 2008-9. and because they're focusing on quality growth. And to your point, that if you do a big stimulus, you'll get bad quality growth, more debt, more bubbles. But the counter to that is if you don't do big stimulus and there is just a loss of confidence in the economy, do you get into a debt deflation spiral and a funk that's hard to kind of get out of? So there is that trade-off that is very challenging to deal with.